It is the Ides of March, March 15, 2024. It's 8:50 a.m. Eastern currently. And what you're looking at are a lot of levels on the spider chart on the SPY that we'll use to trade against in the E-minis. And just a little explanation here. Um, the middle one here, one of the middle ones, 514.95 is just the gap left over from yesterday. They've been hanging out like they typically do overnight. Not a lot of strength either direction. Currently, they're at 513.32, drift a little bit lower. And all the other levels are formula derived levels, except for the bottom two, which are dashed. And they're kind of sort of a zone. It's a large zone, but it's kind of the last, line of defense for the bulls before they could fall farther. There's other levels underneath this, and anything can happen. We're at the end of the week. Friday, and where they close is important. We might even take a look at the weekly chart in a moment. But for just the intraday, relatively small scalp trades of 4 points, give or take, this is what we're looking at. And we will check back after the market closes to analyze all the trades. But first, let's take a look at the weekly chart. So we've seen this before. We've gone up 21 weeks. There's a big doji candle here, not on a tremendous amount of volume, but where they close this week, if they stay below, and I have a line at 518.50, it's above the high of this week close, the last week's close, which is 518.22, but it's an important area. So it kind of keeps this intact. They would probably pull back a little bit, would not be too surprising. So we'll see what happens today. They could spike above this, they can come back down, but if they close below 518.50 this week and next week and going forward, then we'll probably see some type of pullback. If they get above it, well, they're going to go higher. Not sure where yet, but we will keep an eye on it. We're really mostly only concerned about these little small intraday trades based on smaller time frames. One last look at the 1 minute chart for the full day. We'll come back to this chart after the market closes and analyze all the trades taken in the E-minis. It is now 5 o'clock p.m. Market's closed, and what are we looking at? Well, there's two trades that we're going to look at. They were recorded. The recording ran pretty much all day. The spiders hit to 3 levels. 2 trades were valid. And let's just adjust this and zoom in on the relevant part of the chart today. Chart's been expanded a little bit, and the levels have been adjusted with a 5-cent buffer factored in. So the first trade, that would have been a trade if certain things had happened, was down here at 509.69. They came up close within 10 cents on this little pull, this little attempt here at 9:46, right after our time is available for us to trade. I don't like to take trades before 9:45, but they pulled up definitely more than 40 cents or 4 points in the ES, and that pulled back within a minute or so gave me pause to enter this trade. So I canceled the position. You'll see the recording of this, just basically called this thing satisfied without actually entering the trade because I wasn't sure if they were going to go lower. Today, I wanted to be on the short side based on everything I was looking at on the charts, the way they fell out of bed right off from the gap from yesterday or the close from yesterday. So I got my chance to go short up here. We'll talk about that in a minute. So I didn't take this trade. As you can see, it would have worked after kind of hanging out out of the money a little bit, but no harm, no foul. Did not take this trade. The short trade up at 511.25 worked out. And at this point, there are several clues, the writing on the wall from everything else I'm looking at on my other charts gave me a lot of confidence to just ride this thing out. So I didn't have a trailing stop, anything. I just kind of kept my eye on it. And you'll see this recording, excuse me, as I rode this thing down a little over 20 points. 2 jumped out when I got toward the low of the low of day, or the opening range low here. And did not enter this trade here. Didn't really need to after this nice run I had. But per the rules, this would have worked great for another base hit. And let's just take a look at them. Before I start playing this recording, I just want to point out that I didn't realize until much later that I didn't have the little green clock in the lower right-hand corner that's usually running down here, so you don't see the time running as time progresses today. But you can see it. I'm pausing this here right at the very beginning. I started the recording right at 9:45 or so, and checking the low of this candle. That's about when they bounced up, and I decided pretty quickly to just call that level satisfied and not trigger the trade. So that's what happened there. Made the line dashed or dotted. That's my clue that it's pretty much been played. So I'll scrub ahead, and you'll see them hit this level and play around a little bit, come under, come up. You already saw this in the overview, and that would have given a base hit there. It worked out. It would have worked out. But like I said, playing by the rules is better safe than sorry. So when they got up to 511.25, the order in the system was to go short at that level, and I'll just let it play from here. So the green line at 510.85 is just my reference point of the 40 cents in the SPY for a profit objective. That's the equivalent of 4 points in AES. So I just want to see what they're doing before they get there, because just like, if there's a near miss scenario, then I would make that decision, but there wasn't. In this case, it's valid. So I let them go, gave them a little bit of leash, because at this point, like I said, there could be some faking out going on at this point, but the ultimate direction was lower. Those were the clues, writing on the wall, as it were. So when you see this trade get back into the money, they had a couple kind of like pushes down, and it kind of gave me a clue that, okay, I'm just gonna let this thing ride. So kept an eye on it. I was ready to, if they got back up, close the entry point, or like, I'm okay with a base hit. I like the 4 points, 5, whatever, if I can get more, but 4 just tends to work more often than not. But in this is one of these cases where I did not want to put a trailing stop on it. Didn't want to get stopped out at 6 points or something like that. I just want to see how low they can go. And once they got healthily below this area, I figured I'm good for a while. Even if they were to hit some resistance down here at 509.69, I had my eye on a lower area. More specifically, the bottom of the day so far, the low of this opening range, and I jumped out before that. So it was a pretty good run. I'll just scrub ahead. You can see this fall keeps going down. Kind of took a look at a little bit of a support there, but not a whole lot. That level's already satisfied. So then I started kind of analyzing when I should get out. So actually, you just messed me back up. So looking at the overall day at this point, around noon or so, I think, and I just put a line there to buy back 4 contracts as they got to the bottom of the area. It worked out pretty good because they've kind of bounced in that area. And I'm also making the decision at this point, well, do I want to make a long trade at 508.55? Because if you recall, this is the zone we talked about this morning. While it's a large zone, it's possible for them to, bounce here or anywhere in the middle of this, even go to the very bottom. And I just, after this nice run I had and pulled, 20 something points out, $4,000, 4,000 plus, I didn't want to risk it. So I just kind of watched it. So you'll see me kind of analyze this or just keep an eye on it. They got down to 508.55. Also, it's kind of interesting to point out that, what was support resistance, was support here, came resistance on the second time they came up to it. But anyway, I don't like taking trades the second time around. Anyway, you see me hovering right here at 508.95. That's 40 cents. Just to kind of give me an idea. I didn't draw a line there, but that effectively is the line to see if they were going to bounce up 40 cents and if this trade would have worked. Because, per the rules, there's no reason you shouldn't have had this trade. But I just, like I said, I saw them kind of, anything could happen. It's a Friday. It's in the afternoon. I had a good run, so I just didn't take it, but who could have? I'm counting this as a base hit in the tracking log, by the way, but I'm also counting this as a base hit. I mean, playing by the rules is just, I want that log to be accurate, so everything that goes in there, every level that's hit in the spiders, gets coded like what would have happened if you had taken the trade per the rules. So we'll talk more about that shortly, but let's just let this play out. So here you see them. Yep, they go up. So that would have worked out, but nothing else happened. They never got any lower or higher, hit any other levels. So those were the 2 official trades for the day. Here's a weekly chart again. So just a reminder, we talked about this a couple times before, the time it took them to get to this point. The close last week provided this nice little doji candle on moderate volume. They gave us another doji candle today, the close today of this week. And of course, they're above all the moving averages. They, really didn't get anywhere close to this 518.50. They did this week, but where they close really is more important. So, while they're very bullish still in the longer time frame, they're above it on everything on the daily average or the daily chart as well. But on smaller time frames, starting with the 3-hour chart, let's just take a look at those right now. They are starting to get below some important moving averages. No big deal on the 4-hour chart, just got below the 20-period moving average, but they're still above the 50. And 50 is kind of the important one. On the 3-hour chart, they are below the 50, and they've closed it below today. Below and closed below on the 2-hour chart. On the 1-hour chart, they're below the 50 period and the 100 period moving average, closed several candles below that pretty much all day long. And on the 30-minute chart, they're below the 200 period moving average. So this kind of gives you an idea of what's going on the shorter time frames, just to give you just a full picture of everything. Of course, the daily and the weekly, they're still very strong. But let's just kind of keep an eye on what's going on because they're an important time and area at this point. I mentioned earlier that we're not coding 509.64. Didn't take the trade per the rules because it was a near miss. The short trade at 511.30 was just a base hit, calling it 4 points here. I got a lot more than 4 points. You saw that happen. And then 508.50 when they went down there was another base hit. I didn't take that trade. Didn't really need to today, but so 2 base hits, 8 points. Not a bad way to end the week. And just want to point out that, so this is from March 4th through the March 15th, 2 full weeks. I've been providing these levels to some people every morning who are interested in them. And, getting a little bit of feedback, but if you've been following along, trading these levels and experimenting with them, then even with this maximum loss limit that happened that was hit on the 12th, which if you saw this video, you saw that I held on and actually made some money on this because I, saw some writing on the wall in the other chart, which is part of the course that I'm developing. There's a lot of clues that you can be gathering information from that gives you validation and confidence when entering these levels. It's not just blindly trading at every single one of these levels. But you don't always see that here. I talk a little bit about it, but no matter how many contracts you're trading, one or more or micros, you would have done pretty decent this last couple of weeks, even with this max. I mean, like 4 contracts traded from the 4th through the 15th. If every level was traded per the rules, including that big hit, the average per day was $810. That's over $8,000 for the last 10 days. I did actually better than that. I'm not trying to brag or anything, but you saw my trades because I've recorded them and I'm sharing them with you. So anyway, so I hope you found this information interesting, and I appreciate you watching. And I'm just going to point out now or mention that it's very unlikely that by the 18th I'm going to have this course done. I want it to be as perfect as possible, and there's a lot going into this. I'll work on it this weekend, and we'll see what happens. But by the 18th, which is Monday, the videos will be caught up to current day, meaning the activity that happens on the 18th will be recorded and posted on the 18th. So that will be more current and relevant to everyone. And I'll give an announcement on what I'm going to do about the course, the website, and providing these levels going forward. Again, thanks for watching, and I hope you have a great day and weekend.